Tough to follow that last act, but maybe we should start by introducing some of my co-panelists. So, Morgan, why don't I start with you? Morgan is Global Head of the Data Center Investments at PGIM. And for those of you who don't know, PGIM, one of the biggest investors in the world, 1.23 trillion in AUM at the minute. And you lead all of their digital infrastructure strategy globally. You're based in Japan, but have been in Asia since 1989. Darren Hawkins is CEO of Space DC, based in Singapore, a long-standing player in the data centers, both in terms of design and building. I think the firm's been going for over 60 years. So we have a great panel here on my left. I'm Alex Paul. I lead our global technology, digital services, and financials investment banking business at HSBC. So just to set the scene, we're clearly talking about the APAC boom. A piece of research that we did at HSBC forecasted that there'll be record amount of investment in this space globally, but particularly in APAC, where we see both demand and supply outstripping global growth rates. And within APAC, in ASEAN alone, we see a 5-fold increase in demand over the next 5 years. So huge amount of trajectory in the space. Clearly, quite a lot of capital coming into it. If you look across the record number of private equity investments, money going into the public markets, but also M&A transactions in this space, it's clearly at a moment in time that's very interesting from an investment proposition. So with that in mind, why don't we just dive into it? I guess if I could start with you, Morgan. The landscape has shifted, and it'd be great to get your perspective and what the key drivers for that have been over the last few years.
Well, across Asia Pacific or globally? I mean, again, I think there's parallels, I guess, globally, but so I'll narrow in on Asia Pacific. I mean, again, I think Robin alluded to this in some of his comments. Obviously, the growth in hyperscale, which is the component of the data center space that we're focused on, we got its start in the cloud side, took off in the U.S., Europe, and then Asia's been a bit of it's been kind of trailing along behind, a little bit behind the rest of the major markets. We've seen that obviously accelerating. It's the fastest growing market now, which makes it a pretty exciting place to be. The one exception, I suppose, is China, which by policy we've seen suppression in demand, and there's probably been more flexibility in supply there. So, but if I look at the other major markets within Asia Pacific, Japan, that we would really focus on, which would be Japan, Korea, Singapore, Australia as the largest ones, and I look at Malaysia these days, and Robin's alluding to this as well, as sort of a spillover and an extension of Singapore, not offend anybody from Malaysia, but it's that growth of demand and opportunity there has really come off the back of that. So a pretty exciting time to be investing in Asia Pacific as it is globally. And what I particularly like about Asia is because it's lagged a bit behind, we see a lot more upside than potentially in the U.S.
And Darren, could you talk a little bit about how AI has changed the landscape?
Certainly. The impact of AI on data center growth seems to just compound. I think since I can remember back in 2010, people have been talking about the end of the growth rainbow for data centers. They've been talking about efficiency, they've been talking about all these things reducing the demand for data centers, and it's never really eventuated, although it has got slightly better because of those things, Moore's law and all of that. But what AI has introduced is yet another compounding element that sees that growth accelerate. So I was reading a couple of interesting statistics. In the last 3 years, we've made more information than we've had in history. So there is a lot of information being made. And I think back to the times when I was working on Telstra with their data center strategy back in Australia, and they were working with a petabyte of data, which was considered a lot back then. And then you look at what AI would do with that information. They'd make copies, they'd model, they'd remodel, and all of a sudden a petabyte becomes a few petabyte. And then you do that between different suppliers, and 1 petabyte of core data could turn into 10. So we're now looking at exabytes of data and thinking in these quantums. So for me, the development and the growth of AI, and Robin touched on this in the last talk, we've only just started to see it in some sectors, some obvious sectors. And I think as it permeates through society and we all see the benefits of those tools, they're only going to grow. So I think that's going to result in about 20% compounded growth for the foreseeable future.
And Morgan, as we think about how you'd access these investment opportunities, could you talk a little bit about the different ways you can do that and where you see the most opportunity?
Sure, and maybe it's helpful before I sort of answer that directly is to give a little bit of background on the way we look at things and where we come from. Because PGIM, we're an investor in data centers. We're very much focused on the physical infrastructure. We're not investing in operators themselves. We have kind of an approach of operator independent. So anything which we invest at the propco level, if you will, and not the opco level. So when I look at opportunities in any given market, I have a number of different ways in which I can pursue it. I can look at it from the perspective of, the kind of lowest common denominator is purely a land play and working on finding a piece of land, getting it powered. Moving up the spectrum, you're looking at whether it's a build-to-suit, and that could be a build-to-suit in the form of a powered core and shell. It could be a build-to-suit in the form of full fit-out. Our preferred approach is actually to do co-location builds on a speculative basis. We just feel that's the most interesting opportunity right now because if you found a good location, we think the demand will be there when once you've completed or you're under construction of that facility. And it puts you in a better position as in discussions and negotiations with customers. So we are in a situation where on the back of the demand profiles that we're already coming out of cloud, the AI demand, which Darren was talking about, is again created this incredible opportunity, what I call a generational opportunity to get money to work within this space and generate what I consider to be outsized returns relative to the risk. And again, you can play it across those various formats depending on what your risk profile is, what your and the specifics of the market that you're investing in.
I think it's fair to say, though, that there has been an increase in the different types of investors looking at this space over the last, call it 5 years. And maybe, Darren, you can talk a little bit about, from an operator's perspective, how do private equity investors differ in their approach compared to some of the more traditional investors?
Certainly. When you talk to different investor groups, and I think it's great to hear Morgan explain their investment thesis, because all investors do have a differing thesis on why they're approaching the market, what they want from the market, their risk tolerance, their expected returns, and also quite often it's all funds based, right? So they'll raise a few $1 billion here, a few $1 billion there, and that fund has an infinite time. So if you don't meet that investor at the right time, you might not have the full life of the fund to realise those gains. So there really does have to be a perfect little storm to happen on a particular deal. So a lot of investors also are very keen to understand a lot of the parameters around data centres, and I think Robin touched on it in his talk earlier. Back in the day, it was very, very difficult to explain a lot of the parameters around data centres. That even people understanding propco and opco was not very common a few years ago. So I think as we move through an education process and we become more sophisticated about how investors go in and out of data centre deals, I think that's obviously a welcome thing. I think that when you look across the investors and their parameters, working out the right investor for you is absolutely paramount.
Yeah, I guess to add to that, what has been really interesting about this space is, given the diversity of investors, the risk return profiles that each would have, actually it's meant that you've ended up with a full complement, a full suite of investor types, right? Because you have some investors who come in particular stages of the life cycle who need an exit, right? And that exit used to be the public markets. That is no longer just the case, and so that evolution has meant that actually it's added to the richness of availability of capital for the operators. And I guess to take that one step further, Morgan, the idea that you can co-invest with operators or local players, have you seen a rise of that? Do you think that's unlocked a lot more opportunities in the space?
Well, I would say that we, as a fund, we're fairly unusual in taking the approach we do, which is this sort of operator-independent model. I think most of my peers and competitors are taking the position they want to build their own operator and invest through their operator. You know, again, Air Trunk with Blackstone is a good example of that, where Blackstone, you know, through QTS has been investing through their own or alongside their own operators. So I would say that there's a relatively small component of the investor universe right now investing in development of data centers that's actually taking that approach of co-investing with operators who are completely independent of them. But I think I obviously think it's the right strategy, and I'm not completely objective in that, but that is my view. We did arrive on this. I will say, just picking up on your last comment, I think we're so early, though. You know, there's two things I always say that the industry continues to be short of. One is power, and the other is capital. So while there are all these pools of capital that are being collected out there or coming together, we are so early in the embrace of the data center sector by institutional investors. And so that liquidity, the exit liquidity, frankly, today is not what we would all like, you know, on the development side. And I think there's a lot of challenges, and we're seeing this in the United States particularly right now. There's a lot of development which has occurred. We just aren't getting the exit liquidity that people would like. I'm not particularly worried about that because I'm of the view that it will come, because I look at this as the industry right now being sort of where logistics was 15 years ago. You know, at that time, there was not that many pockets of capital that were really going all in on logistics. But today, you know, it's a pillar of just about everybody's real estate portfolio. So I think the same thing is going to happen in data centers. It's going to happen more rapidly because, frankly, I think the story is a lot more compelling. And so over time, we're going to get that liquidity, and the liquidity is going to come in the public markets, it's going to come in private markets, it's going to come in specialized funds. It's all the open-end funds in the United States and Australia and elsewhere will be investing in data centers. So I think from an overall capital markets perspective, from an overall equity investment perspective, we're very, very early in the process.
Can I add? I think that's right. And part of the exit strategy, you've got to remember, whilst there's only sort of 5 or so people coming into the data center as your customer, at the end of the day, the off-takers from the PE side, you're mostly looking at pension funds or sovereign wealth funds, right? And there's not all that many of them that are interested in owning data centers, but you really do need to consider that exit. I mean, obviously, you know, going public is an option, but it's less favoured these days. So getting that exit can be quite crucial as well.
Yeah, and I guess thinking about where that money is going today, I just want to get into the differences between sort of core and developing markets here in APAC. And when comparing emerged markets like Japan, Korea, Australia, you know, to the likes of the ones that are more emerging, like Malaysia or Indonesia, you know, Morgan, I'd love to get your perspectives on that.
Sure. I mean, I've been pursuing this space sort of off the side of my desk starting back in 2014, and to become my full-time role really end of last year, but with increasingly more and more of it over the course of the last 5-6 years. And I would say, you know, when we began developing our strategies around the space, and we did look at one time of going after and developing our own operator and other things, we were of the view, you know, 3-4 years ago, 5 years ago, that the developing markets were where we probably were going to want to play in order to get the premium returns that we were targeting. I think the market has evolved quite rapidly, and I put the date of, you know, November 2022, and you had the release of ChatGPT, and that sudden new wave of demand that's come through from the AI requirements that changed sort of our focus, or changed the markets enough that we sort of changed our focus in the way we're looking at at least near medium term investment opportunities, where we switched very much to a focus on the sort of on the tier 1, you know, call them tier 1 markets. But even in more than tier 1 markets, you know, tier 2 and tier 1 are sort of merging together, if you will, because the demand has been focused there. The real large-scale demand has come into the Japans and the Koreas and the Australias. There's demand in the emerging markets. Yes, there's opportunity there, but at a much lower level at the moment, and with a lot more risk involved. So we've pivoted to a real focus on the developed markets within Asia Pacific. Fund 2, Fund 3, will we be playing in the other markets? Undoubtedly, but for now, I really see the best opportunity in the developed markets.
Darren, do you have a view on that?
Yeah, I think our witnessing of investors and their profiles is definitely a shift towards core markets. They want to be in Sydney, Melbourne, Tokyo, Singapore, primarily. You know, their investors that they're raising capital from, that's where they're used to investing, that's where they see core plus returns. So that makes a lot of sense, which means that when you're working in emerging parts of Asia, you do need to find different types of capital. We often found in trying to develop a platform, when you've got emerging Asia in it, it's very difficult because some countries are easy to develop in, you know, whether it's Australia or Singapore for whatever its reasons, but then you've got other countries that have complications. And some of those complications might be land ownership or, you know, election risk or just governance. And so trying to find an investor that's happy to go across those emerging markets is very difficult. They tend to be country by country specific. So when you're building out a platform, that's very difficult. It is easier if you stick to core markets. So none of it's easy, it's all hard work, but certainly we see the difference in investors from those two perspectives.
But there clearly is demand for data center capacity in places like Malaysia and Indonesia and the Philippines. And there clearly is supply because there's a lot of building going on. From an investment perspective, and you talked a little bit about the challenges, I wonder if you could say a little bit more about, you know, as investors look at these markets, what are the biggest hurdles today and what progress are you seeing being made in that space?
Certainly. I think we all know that power is an issue. The fact that there are energy plants out there making power is a good thing, but a lot of it's not the right type of power. It's all coal driven. But then you've got to look at the distribution network for those countries, and that seems to be something that's lacking. Obviously, water's an issue, getting water to the right locations, and of course no one wants to develop a data centre and then have the local community complain that they can't get water. So, you know, you've got to have a good balance there. And I think what we don't remember is that they're two infrastructure pieces, right? Power and water is infrastructure, whereas data centres are developed more under a building economic framework, right? So builders are used to working at pace, they're used to being incentivised, they're used to pivoting, they're used to being, you know, ingenuity. They have all of those things. But when you go to power distribution, they've worked the same way they have for 30 years. So it's very difficult to get them to deliver faster and innovate, and the same with water. So, you know, you've got these issues across those emerging countries that you've got to sort out. There is a lot of other issues, like if you look at the Philippines, you know, it's on the ring of fire, so it has a lot of seismic issues, it has a lot of active volcanoes, it has a lot of mud landslides, especially south of Makati. So you've got a lot of these localised geographic issues that you have to deal with, whereas I think in other cities, you know, like Melbourne or Sydney, you can just go and pick a piece of industrial dirt that's already developed and it's ready to go. So there are a lot of challenges, I think, that need to be overcome. I think working with investors who know Asia and are used to working in Asia is really helpful. So it's not surprising that we see, you know, people like Capitalising or whatever working more, like they're diving into India, right? They're ready to go. So I'm not surprised to see things like that because they're used to that territory.
Can I just add one thing to that, Alex? I mean, so Darren and I know each other originally from trying to work through one of those challenging markets, and I think that the issue for us is those challenges make it more difficult, which mean that your threshold for return should be higher to take on that additional effort and risk. And I think what's happened, what's very clear in these marketplaces is that you've got all the challenges that Darren's outlined, but still you've got more elasticity in supply and less growth in demand, or less absolute nominal growth in demand. Whereas in the developed markets, you've got less elasticity in supply and a greater demand profile, which is resulting in rents moving up quite quicker, better development yields, et cetera. So I would say it's all those things, but and we take on all those risks if we felt that there were incremental return available. But today, where we are at the present stage of the evolution of the industry, it's not differentiated enough.
Absolutely, the risk-adjusted return doesn't warrant it.
So the risk-adjusted return hasn't hit the tipping point yet. Are there things that governments in those countries can do to hasten that?
That's a good question. I was surprised, for example, in some recent trips to Thailand, how well prepared Thailand's electricity market is. They have for a long time invested in electricity, so they're not having some of the issues that you see in countries like Indonesia, where you have demand issues, you have power quality issues, and then you have obviously how it's produced is an issue. So some countries do have bigger hurdles to face. I think countries like Malaysia have done really well in terms of recognising the potential of the data centre industry, and they've sort of embraced it with open arms. The government's been very good at sort of meeting and greeting and welcoming and listening to the data centre industry and taking on board what they're looking for. So I think some people see the future and want to be a part of it, which is great. So hopefully more do.
Yeah, and I guess on that point, you can have, and we're interested in your views about government incentives around tax and other fiscal incentives, but it feels like you can have as much of that as you want, but unless you've got some of the basic components like power, the grid, other infrastructure around to support these investments and these build-outs, the starting hurdle for an investor is still not met.
I mean, what do you look for in every market? You look for consistency, reliability, predictability. Ideally, if you're an investor, you don't like surprises. And while it's great to get subsidies, it's always nice to factor in. Ultimately, the market just tends to just adjust for those subsidies in any case. So as an investor, I'm less looking for subsidies than I am just looking for, again, consistency and reliability, and whether it's the power infrastructure or the regulatory framework, which is, I think, it can become increasingly critical to this industry. That I think regulation is a real looming issue for us. That is, that I think we'll be focused on more and more as we move forward.
And just on that point, let's talk a little bit about data security. Clearly, a growing concern amongst governments everywhere, including this region. How do you see the regulations and compliance affecting the investment outlook?
Look, yeah, it absolutely does, and it's warranted too. I think if I sit in any country as a citizen of that country, knowing that my core financial and health information is somewhere else, it makes me uncomfortable, right? I don't know what they're doing with it, I don't know how they're looking after it, but the government that I elect and works for me supposedly, I'd like to think that they've got my back in terms of looking after that information, right? So, I think Indonesia, I'm not sure if they've passed that law yet, but they have had the inference of passing a law about data security for a long time. And I think the inference alone was enough for people like Amazon to establish here and start treating data sovereignty seriously. So those things are good, and I don't see any change.
Yeah, and I think I love this answer because it's coming from an operator complication mindset. From an investor perspective, I look at, well, that's more demand. Like the more sovereign, when a country says they've got to have all that capacity kept within a country, well, effectively you're creating, in what I would call is ultimately you're creating a level of inefficiency within the system, because you're going to create demand which wouldn't otherwise not be there if you were shifting information freely without borders.
It'd be a big data center in America, mate.
That's right, or in a few places I could go. I have opportunities, and I think the other thing that's interesting about it is if you look at AI, particularly. I mean, I have this thing, and Robin kind of said that I think he said that digital infrastructure is as important as water and power. I always say that digital infrastructure is the most important infrastructure. None of the other infrastructure works without it. Now, again, that's a bit self-serving given what I'm, my position. But I think you take that and you look at that, and the governments are also recognizing the criticality of the digital infrastructure. So it goes beyond just data sovereignty. It also goes into the need to ensure that they have an infrastructure, a compute and storage infrastructure within country that they can control, that will allow them to keep up with the Joneses as far as the evolution and the application of AI, because AI is becoming such an important force multiplier for military and intelligence applications that I personally think that's why we're not seeing more regulation of AI, is because governments are fearing that if they regulate AI, then they're going to put themselves behind the kind of the global race on AI, and AI is probably has the biggest potential to destabilize the balance of power globally than anything more than we've seen, you know, certainly that I can think of.
I'll just step that back a bit, but in a similar vein, the AI, I was talking with a friend of mine who's quite senior at Apple, and she was telling me that Apple employees use AI so much now that they have training courses for their staff on how to use AI. It's going to be as essential as email in the very near future.
I mean, there's no doubt it's going to be revolutionize lots of things, not least in the financial markets. I mean, when we look at investment opportunities, to the points we've been making around power and utilities and so the ancillary infrastructure, you know, as a house, when we look at the investment opportunities in the public markets, we don't just talk about the data center builders or operators, and we don't just talk about the hyperscalers. We also talk about the power producers in Southeast Asia. You know, people are going to be building infrastructure around it, hardware, software, the whole ecosystem. And it's a seismic shift, right? It's a paradigm shift in terms of how you look at, to your point, risk and reward in this space. I guess two other points to pick up on. You know, to this point about power and water and all of that stuff, the one thing we haven't talked about is ESG and that lens. And as an investor and operator, you know, how do you see the ESG considerations playing out here in the Asia Pacific? Darren, if I start with you.
Certainly, we haven't talked a lot about customers during this session, and I feel a little bit bad, but certainly our customers expect us to have ESG at the forefront, right? They don't really care about our returns or any of that other stuff. And we certainly focus on best in breed when we procure. So we do a total cost of ownership, a total carbon footprint analysis on all our developments. We did do one here in Jakarta, and we were very happy to get a PUE of 1.3 and 1.2 when we were running on gas. We won an environmental award for that project. So that was a really good piece of success. Developed through COVID. We recycled a lot of stuff on site. I mean, it's the good thing about developing data centers when you can embrace the construction industry is the construction industry already has a lot of ESG built into it. You know, they recycle concrete aggregate, they recycle steel, they'll do all those things already naturally. So if you procure correctly, you can harness that, right? I think the other part of it, when you're designing the data center, we certainly always challenge ourselves. Why is that a room? Why is that room conditioned? Why does it have to be like that? And you see it now just today, I think it was Equinix announced their SG6. They're talking about having open corridors. It's certainly something that we've had for a long time in our designs. We certainly see it as essential. They're talking about green walls. We've also had what we call them shade screens in front of the building to help reduce the thermal mass growth on the building. So a lot of the things people talk about, I think we already take them quite seriously, and Robin touched on this in his last talk. I think if you compare a data center to a lot of other building types, we are super efficient. We are a super efficient building type. I think the thing that lets us down is the production of power.
Yeah, because in some ways, the alignment between economic incentives and environmental incentives on a data center is very real and very direct.
Absolutely.
And so those things often get aligned. It's the rest of the system. I don't know.
It's fundamentally a green lease. I mean, your tenant is paying for the power they use, so they're aligned with you in maximizing the efficiency of it, so for sure.
And on that point, I mean, the thing we haven't talked about in APAC and Southeast Asia in particular, given here we are in Jakarta, is the skills gap, right? So huge boom in this part of the world. There's clearly a gap in terms of skills. How do you see that evolving in this part of the world? Do you think people are making progress quick enough?
I think it's certainly a growing sector, and people are willing to come and work in the data center sector. I think in countries like Indonesia, it's a good employer. It's a good pay. You know, people have generally better salaries. They provide training. There's a lot of structure. The work is, I think it's quite good quality as a work environment. You know, there's no ad hoc things that happen. Everything's well planned. You know, you taught a lot about procedures and process. So in terms of a career, it's really good. What we found, especially if we refer to Jakarta, what we found was that we had to be very creative in finding talent. So there isn't really a data center talent pool. But what we had to find is people with the right skill sets and experience, and we had to train them. So we did a lot of training, upskilling of our staff when they came on board here. That was a really good journey. It was great to see people embrace change and grow. I think for countries like Thailand, they're going to go through those similar challenges. I think Malaysia's probably, the sheer volume of growth in Malaysia, I think, is frightening. And that's going to put a big piece of pressure on the skill sets. Whereas countries like Australia, I think, you know, they've got it largely under control. They've got a lot of education programs going through universities and TAFEs. So I think it's a bit different around the region.
And I'll just say, talking to our partners, our operating partners, and we have relationships with a host of leading operators. I would say, I said before, power and capital, the two things that the industry is short of. I think a number of them would add human resources to that is the other thing which they feel is constraining their ability to grow their business, and so it's going to have to be addressed if the industry is going to continue to grow at the pace it's growing, which, you know, at least on the demand side, certainly indicates that it should be.
I think with that we might open up to questions in the room. I don't know who's got the mic. Any questions? Oh, here we go.
I guess I should stand up. My name is Marianne Rajic. I'm with SGT Capital. And a question for Darren, but Morgan, please jump in if you also have a view on this. Darren, you mentioned that the problem is the power generation, and I think that is increasingly a problem. So I know that Singapore has taken some initiative to address that, but it seems that this is still years in the making. Do you see that this is going to have an impact on data centers, especially given that with the rise of AI and, you know, the crazy usage of AI in the next couple of years, there's going to be huge demand?
Yeah, certainly. I think we need to be careful of hoping solar arrays are going to solve the world's issues with power. Certainly, you know, brown coal. There's lots of that in the earth, and many countries still continue to burn it. And I think that's when we talk about the source of problem with power. That's largely what we're referring to, right? But there are a lot of really good wind developments, and there's some countries that really do naturally benefit from environmental power generation. So the Philippines has a lot of geothermal power. Actually, Jakarta can have regions around Indonesia can also do a lot of geothermal. So, you know, certain regions can provide, I think, really good green power alternatives. Hydropower around Asia is also, I think, very much an undertapped source of energy. There's a lot of water in Asia. We all know it rains. So there's plenty of places to tap into that. So I do think we need to broaden, and I think we're also learning to look at the power sector and realise that maybe they shouldn't just have one source of power. Maybe they should be diversifying themselves, and so maybe it is a mixture of solar, wind, and all these other things. Certainly, energy storage still seems to be a big challenge. I know that we're getting better at technology with that, but I still think there's a ways to go. I think I was very, speaking of AI, I was very interested to read some university academics working on new batteries, and they basically trained an AI model to find the cheapest, best material to use to make batteries. And they've discovered some really common types of materials to use to make batteries that will store energy for a long time. So I don't think we're going to see that in the next 5 years, but I'm hopeful that that gets legs and comes out into the market, because I think cheap, efficient, durable battery solutions will be really good for those types of alternate technology.
Alex, maybe a quick extension onto that. I think I almost turn it around to say that the data centers, and we're seeing this in the United States with the growth, with the re-embrace of nuclear power, that data centers are actually, in the industry, is driving the modification, evolution within the power generation sector. And like, I was personally quite surprised at how quickly and easily and without noise the announcements of, you know, the restarting of 3 Mile Island, the commitments with Talon Energy, the push for SMRs, and the acceptance of you know, SMRs being put into, you know, again, one of them in Kentucky. Very surprised that was accepted so easily. I think if it weren't coming from a place of people recognizing that we need the power to grow the data center industry, and the data center industry is critical national security and to the lives that we lead, we wouldn't have had that rapid evolution in the nuclear side or sort of reinvigoration of it. So I think it's both we're a problem and a solution, again, to the extent that you're not opposed to the development of nuclear.
Any other questions from the room? Gentleman on the left.
Hi, it's James Ricks from JLL. Interesting, we've spoken a lot about AI. Where do you see cloud computing going? Is that something that is, you know, static, diminishing, or is that also experiencing growth?
I just say it depends on how you classify inference. And I'll let you.
I think AI is the new trendy topic, right? But I think the beast is still growing. Was talking with some researchers down in Australia not long ago, and when you talk about people moving from traditional compute to cloud compute, right? So Australia would be considered an evolved market, right? It's quite a mature market. And they had estimated that 70% of compute had migrated from my own computers, my own servers sitting in a cupboard somewhere, or maybe my own IT equipment in a data center to a cloud solution. And they saw that as the first generation. Getting 100% is only the first step. After that, that's when we start to see cloud-to-cloud evolution, where businesses can talk to each other at a whole new level that they couldn't talk to each other before because they had this mixed match of technology. So as far as cloud's going to go, it's still got a long way to grow when we consider other countries, especially like Japan, right? Like as big as we talk about Japan is, doing business in Japan is like going back to 1980 sometimes, right? They've got a long way to go in terms of improving a lot of systems and the way they do business. So, you know, if they're already what, 1,000, 1,200, 1,500 megawatts, and they're only 10 or 20% of the way through their journey, you know, that's got a long way to go before they start to get to that innovation layer that Australia's heading towards. So for me, cloud's got a long way to go.
And the point I was making is on top of that, you've got the ultimate inference utilization as AI goes from training to being applied. That's going to have to come through those low latency, or a lot of it will have to come through those low latency data centers. So I would look at that as incremental cloud requirements. So I think Darren and I are aligned in the view that there's tremendous growth still within that space.
I think we've got time for one more question. Sounds like we may be done on questions. In which case, thank you very much.
Thank you.